Good evening, everyone. Yeah, so the next 25-30 minutes or so, I'm going to just delve into this, new exciting opportunity, or it's the, the most exciting e-commerce business, or at least one of the most exciting e-businesses in India right now, which is quick commerce. Has seen, hockey stick sort of growth over the last couple of years and has fast emerged as a challenger to a lot of other retail models, right? So just quickly getting into starting with what really is quick commerce. I mean, it's really nothing but e-commerce with orders delivered in minutes as opposed to days, right? Now, while on uh, may sound fairly simple, but what changes with just this trying to deliver in minutes as opposed to days, there is a change that happens in the network or delivery architecture. The assortment, SKUs, counts, depth, breadth that you can keep. Tech stack changes meaningfully. The organization, from an operations perspective, has to be a lot more agile. So these are all different from traditional e-commerce, right? So, one way to think about it is quick commerce is actually more physical retail than e-commerce and a lot more tech than modern trade, which is offline retail. So it is in some sense, a phygital model, with trying to combine both, the dark stores, which is really last mile physical operations, and then at the back end there is a lot of technology that is powering the ability to deliver orders in minutes, yeah? And replenishing these dark stores on a very very frequent basis. This is a simple schematic of what happens, when you place an e-commerce or a quick commerce order. We've taken the example of Blinkit here. The order goes, to the dark store. There is a lot of action that happens inside: pickers, packers, billers, and then, the picker will pick it up, delivery rider, and bring it to your home. A lot of these steps are happening in, sometimes less than a minute as well, depending on the size of your order. Yeah. Coming to the history of quick commerce, right? It may seem like a new business model, but the first experiments with quick commerce, which is delivering orders placed online in quick time, right? In quick time, and even this is, some of these businesses in the US that we are trying to highlight here. Were started in late 1990s. A business called Cosmo, Webvan, Peapod, etc. And Webvan was promising a 30-minute delivery way back in 1999. They actually raised close to $800 billion of funding in 1999-2000. This was, of course, at the peak of .com bubble. And with the .com burst, this company also went under. But what I'm saying is these, again, that was Internet 1.0. We're probably in Internet 3.0 today. So a lot of these business models have been tried out, attempted in the past. A lot of factors have come together today. And I think when you're looking at quick commerce, India is one market where it has really taken off. And there are, again, some unique factors that have come together to drive that in India, which probably is not the case in most other markets, right? If you look at just the history of Indian markets, it is really a story of the last 3 or 4 years. E-grocery has been around for a long time with the likes of Big Basket and all. But attempts from a quick commerce perspective, really, you can think of it as post-pandemic, with Swiggy Instamart being the first one really to launch it in August 2020. And since then, when you're looking at Blinkit, this used to be Grofers, which was slotted delivery e-commerce. They became a quick commerce player in 2021, right? Zepto started in April 2021. Big Basket, which was the slotted delivery player, again, started converting itself, transitioning to a quick commerce model in 2022. You've had various, forms of quick delivery, right? Not as fast as 10 to 20 minutes, but even in Amazon, they started doing 2 hours delivery. Dunzo was again one of the players. This is, they're largely done. And some of the other players also tried: Ola, Dash, Brazo. A lot of these businesses have shut down. The 3 last players in the industry right now are Blinkit, Swiggy, Instamart, and Zepto, right? With Big Basket trying to transition into a quick commerce player. Now, comparing quick commerce to other retail, what is the consumer use case, right? Really, why is it succeeding especially in metro and tier 1 cities today? If you really think about, consumer transacting or buying grocery or other items, right, from your, they have various choices, whether it is from your neighborhood kirana stores to modern retailers to e-commerce or quick commerce. Now, there are these 4 or 5 parameters, right, that a consumer tries to look at these models, this is the lens that a consumer uses or a household uses, right? Now, where quick commerce really stands out of these parameters, which is convenience, speed, SKUs, and price, is on the first two vectors, convenience and speed. And a lot of times people think of speed as convenience, but speed and convenience are slightly different vectors, right? Convenience is just ability to place an order and get it delivered at home. You don't have to go out. Convenience uh, can also be seen as you needing to place to buy something at 11 in the night, and a platform like Blinkit making it available in 10 to 15 minutes, or a Swiggy, Instamart, or Zipto, right? So some of those things are convenience. Conveniences could be, again, wanting printouts at the last minute for something important. Again, someone like a Blinkit has made it available, right? So these are various vectors on which you can think of convenience. Speed is just speed of delivery, right? And this is really relevant for the first two, which is quick commerce and e-commerce. And quick commerce right now, the median deliveries are happening in low teens. Bulk of the deliveries are happening between 10 to 20 minutes, or in sub 20 minutes. E-commerce in a lot of pin codes has started doing 1 day delivery, but it is higher elsewhere, right? In terms of SKU counts, there are two aspects here. One is the breadth of SKUs and the depth of SKUs, and the third element really is how hyper localized or how localized is your assortment. This is where, again, quick commerce companies, while they of course cannot, with the smaller size of their dark stores, right? They cannot have a very large number of SKUs. So depending on the dark store size, we are talking about anywhere between 5 to 15,000 SKUs. What they do maintain is a very hyper localized assortment, which is relevant, right? E-commerce, just the nature of the business model allows you to have, because these are very large warehouses, on the outskirts. So these guys, all horizontal e-commerce platforms have a very, very, very large number of SKUs. Modern retailers, these are large modern retailers like DMart and Reliance that I'm talking about. They stock anywhere between 50 to 100,000 SKUs, and your neighborhood Kirana stores has between 1 to 3,000. From a price perspective, of course, modern retailers and e-commerce tend to be on the cheaper side. Quick commerce is priced, from a pricing perspective, they price their SKUs higher than e-commerce and modern trade, but lower than Kirana. So if you were to just look at versus Kirana, more convenience, better speed, of course. Your neighborhood Kirana store may be delivering, but may not be able to deliver in 10, 20 minutes consistently. But pricing is higher. So there is a trade-off, but assortment is better. So, a quick commerce business model, it scores on 3 out of 4 parameters. And similarly, if you do a comparison, it doesn't beat any format on all the 4 parameters, but scores reasonably well in at least 1 or 2 for it to become a very, very relevant retail channel for a lot of households. Yeah. Just some numbers on the hyper growth that I was talking about. We've seen a J-curve hit. The business model really got established in 2020, as I said. Overall industry closed at a GMV of close to $3.3 billion last year, with Blinkit being the leader. This number probably would touch somewhere around $6 odd billion this year, looking at the rate at which these companies are growing right now. Just comparing quick commerce and e-commerce growth last year, quick commerce grew 73%, e-commerce grew 14%. So of course, outperforming e-commerce significantly. And what you're seeing at the bottom is a growth comparison of DMart and Blinkit. Of course, percentage growth for Blinkit is significantly higher, but more importantly, if you look at incremental revenues on a YOY basis, last quarter, which is first quarter of 2025, the April, May, June quarter, DMart added 2,100 crores in revenues versus what they did last year, same quarter, while Blinkit added, in terms of gross order value, which is equivalent of revenues for DMart. The reporting is slightly different. They added 2,800 crores in revenues. So
this was very interesting. This was very interesting and striking to me, Rohit, when you laid it out.
No, absolutely. They caught up in fourth quarter, and they're now growing faster. My expectation is this gap will widen in the third quarter. We know, DMart has roughly added about 17 odd billion. 2Q to 2Q, the number for Blinkit could be materially higher than that.
And DMart is a 20+ year business, whereas Blinkit is a few years business.
3 years, really.
4 years.
In the Blinkit avatar. Yeah. Now, what are the factors driving quick commerce hyper adoption in India? And on a lot of these parameters, India is different from other markets. As we go through these one by one, you'll see some places where India is different. One is, of course, low penetration of modern retail or convenience stores in India. In fact, the convenience format really These are your 7-Eleven formats. Now, Reliance has, of course, started launching 7-Eleven stores in India, but these are far and few in between, and the viability is still not proven. Modern trade, we are really talking less than 10,000 total modern retail stores in India, right? So that would probably work out to something like 0.1 per thousand households or so. This number is materially higher in most other markets, right? So penetration of modern retail being low, makes it an inconvenient format. If I have to go to, my nearest DMart store, density in a city like Bombay could be high, but the even a distance of 1 kilometers would mean a travel time of 15, 20, 30 minutes, depending on the time of the day, and traffic, right? And then going into the store, it's a crowded store, so it becomes a 1.5, 2 hours affair, right? And inconvenient. While the same shopping trip can happen online on a quick commerce platform, and you'll have the goods in 15 minutes. Yeah. Now, why is this the case? Why has modern retail not really penetrated the Indian market? And think of it as the biggest problem has been viability, which is caused by this combination of low labor costs and high real estate costs in India. This is the real problem: high real estate costs. Right, low labor cost is actually an advantage for all businesses, but high real estate cost, because if you're a modern retail store, you need prime real estate, and you need, large spaces, right? The traffic, heavy traffic situation, scenario in most metros in India also means that people don't want to travel, long distances. In the US, a lot of this big box retail happens in the outskirts. uh, you know a lot of Walmart stores will not be in downtowns. It'll be in outskirts, suburbs, etc. But where real estate costs are low, you can actually get large spaces at reasonable rentals. People will drive, but that's again something that doesn't, India's, the traffic conditions, etc. are not very conducive, and of course car ownership also is on the lower side in India. The other part is really high population density, which actually lends itself well to viable dark store economics for the quick commerce players, because you can actually, if you get your business model right, you can actually have high order throughput per day per store. And we'll talk about some of these numbers later in the deck. There is also a higher need for convenience, right? I've just spoken about poor urban infrastructure, right? So convenience is at a premium. You have time-starved urban, high-income, upper middle-class households. India also remains a largely home-cooked meals market, with increasing pressure on, on especially the women folks in various families. They really starve for time to go out and shop. Help at hand is reducing in general. So to that extent, a service like Blinkit or Instamart or Zepto comes in extremely handy. The other unique characteristic of the Indian market, which sort of also ties in with the last point, which is higher proportion of fresh consumption as part of your overall grocery basket, right? Fruits and vegetables and dairy. What tends to happen is you have a lot of top-up occasions, yeah, versus stock-up. So what this means is stock-up. Think of it as, first week of the month, you just go and stock up your pantry, and then there are a lot of top up. Once what you had stocked up gets over, you top up small quantums through the month. So if you go by some of the research agencies data, Kantar in particular highlights that India has one of the highest, if not the highest, number of shopping occasions for grocery per month per household. Yeah, I have a request on the chat box to just highlight the last slide for a few seconds. I'm just going to keep it on for a few seconds before moving on. Yeah. Lovely. Now, where is this growth coming from? What is the source of this growth? Has it impacted, or which other parts of grocery or non-grocery retail has it impacted? Right? Has it led to a decline in any other segment? No, because there is strong underlying consumption growth. Right? Nominal terms, our GDP is growing at between 10 to 12% in different quarters. On an annual basis, maybe closer to 11% at this point. While consumption has been growing slightly slower than nominal GDP, overall it's still a very healthy high single-digit growth rate. So all formats are growing. That's point number one. But there is, of course, some share shift that is happening from slotted delivery e-commerce, which is players like Big Basket. Their slotted delivery has suffered. Amazon, again, slotted delivery has suffered. JioMart, their slotted delivery has suffered. It has also impacted growth rates for modern retail. We just looked at some data for DMart. their growth rates have clearly slowed down. Their second quarter, they're suggesting sub 15% growth. This has slowed down from 18 to 20% that they've been clocking for the last few quarters. What the quick commerce companies have also done well is they've gone beyond those. They've expanded their use cases. So quick commerce, while it is often thought about as a quick e-grocery format, it's not. It has become a lot more than that. And we'll give you some examples in the next slide. The other one really is, they've also gotten into use cases not possible in physical retail, right? The unique service that Blinkit has is printing. And beyond the monetary value, I mean, this may not contribute a lot to GOV, but it builds very strong consumer affinity when you can deliver a printout in a time of need for a consumer. It builds a very, very strong consumer affinity. Late night deliveries, a lot of these dark stores are operational till late hours. Yeah, just a glimpse of the expansion beyond e-grocery of various quick commerce players. You have fashion, and this is of course core. They're not getting into fashion, but this is more core apparel, right? Because there are elements within fashion that especially exchanges, returns, etc. That and also the slow moving nature of fashion inventory, right? That doesn't lend itself very well to quick commerce business model. But core is something they can do, and they've started attempting that. Some of the other categories like electronics, Zepto has experimented with food. There was news today that Blinkit could also get into 10 minutes food delivery of snacking items very soon, right? So a lot of experimentation happening. And one thing about these new age companies is they keep running a lot of experiments, low cost, what they call A/B experiments, and we've seen these companies continue to do so, right? And some of these categories have become meaningful. For example, the beauty category or BPC category for someone like a Blinkit is now probably touching double digits of their GOV, which is a very, very healthy number. And a lot of these categories also are higher, offer higher margins than core grocery, right? So these are also margin accretive. As long as you can manage the inventory turns well, these could be both margin and ROC accretive for the business. Yeah. Now, talking about a couple of unique advantages that quick commerce businesses have that others, especially offline businesses, don't have. The first one is the power of the null search. Now, null search is really, when a consumer goes to one of these platforms, searches for an item, or a category or a brand, and it is not available on the platform. Not available in the sense it is not out of stock, but they don't stock it at all, right? Now, if a large number of searches for that particular brand, that particular SKU, or that particular item or category happens, right? This intelligence keeps building in the system, and when the number of searches for a particular category or SKU or brand goes above a certain critical mass, a quick commerce platform can quickly start stocking that. So you are getting a lot of low cost crowdsourced intelligence. Now think of a similar situation, a failed shopping mission for a particular item in a DMart, right? Or a Reliance Retail. There is no way for these offline retailers to capture that intelligence. The customer is not going to go to the counter and tell them I was trying to search for this particular item, but it was not available, right? So that intelligence gets lost while these platforms can capture it. So there is huge power in null searches, and this is how they've been expanding, right, their assortment or fine tuning their assortment, because when you open a new dark store, you take some time to understand what sells in a particular micro market, but null searches are a huge source of intelligence on the local market for you. And then consumer preference understanding at a hyper local level. You would have seen, a lot of you would be quick commerce customers, you would have seen them leveraging these events and actually having storefronts for specific festivals, specific days, whether it is Valentine's. Right now, if you go to any of these platforms, you'll see a storefront for Navratri needs. I was intrigued and quite amused actually when I saw a Paryushan page. Now Paryushan is a Jain festival which is really all about not consuming. Right? It's not about consumption at all, but these guys had a Paryushan page as well for those 8 days in the month of August, early September. Yeah. So similarly, these guys are leveraging a lot of this hyper local. There is a festival which is celebrated largely in the state of Orissa called Rajo, right? So in towns in Orissa where they are present, they had a Rajo store. So we keep checking some of these things, and these guys are leveraging some of these local aspects extremely well. This again beyond the consumption or GOV, uptick that these things offer you, it ends up building very strong consumer affinity and repeat rates. Yeah. That's one. This is just a snapshot of some of the comments from other industry participants on quick commerce platforms, and these are just indicative of the fact that quick commerce is becoming, or gaining salience for a lot of FMCG companies. You have a comment from HUL: 10% of their ice cream business now is quick commerce. PNG, quick commerce growing at 2x of overall e-commerce. You have Honasa, quick commerce is already 10% of sales, growing at 3x any other e-commerce vertical. Only scratching the surface at this point in time, because most of the sales are coming from only from the top 10 cities. You have even a very high quality competitor like DMart, right? Uh, Talking very positively about quick commerce companies. Neville says quick commerce is delivering excellent convenience, almost zero friction, which is, a good validation of the operational excellence of some of these companies. Yeah. And, for some of the companies, like Dabur, uh, because of the mix that you can sell on quick commerce is also emerging as a margin accretive channel. So this is just a snapshot. A lot of companies are really looking at quick commerce as an engine of growth at this point in time. Yeah. Just to talk about some profitability drivers of the business. There are levers on both the revenue side and cost side. And while there are a lot of details here, if you look at the call outs in various clouds here, these are the major drivers that we see over the next few years. From a margin perspective, of course, economies of scale. And these, would play out both at the dark store level. So there is operating leverage available at a store level, right? Because there are fixed costs associated with running stores, whether it is rentals, whether it is even your staff costs, utilities, etc., where you will see operating leverage play out. Sorry, just yeah. Then higher share of long tail. What I mean by this is, you have to be competitive on some of the higher frequency items, whether it is grocery items like your atta, dal, chawal, etc. You have to be competitive with other platforms, right? Because this is where the customer is actually looking at the price. These are what someone like a DMart calls hero products, right? But it is the long tail which is where you can actually enjoy higher margins. And quick commerce, because they're also removing one layer from traditional e-commerce, right? In traditional e-commerce, you have the platform making money, a seller also making margins, and quick commerce can remove one layer. They can actually be very, very competitive on some of these long tail categories, right? For example, the pricing of an iPhone on day one or PS5 has actually been similar to an Amazon or a Flipkart on the quick commerce platforms, and you have the added convenience of not having to stand outside the Apple store. If you really wanted to get it on day one, your best choice was to get it from one of the quick commerce platforms, right? With scale, these companies should also be able to improve, their take rates. This could be higher margins that they can demand from the suppliers as they become, more meaningful consumers for the likes of a Unilever or any other large FMCG company or otherwise. Uh, Private label is still very early stage for most of these companies. Zepto started, seeing some success in their private label meat and seafood business, but all of them, are trying private label in some category or the other. And then, of course, at least for two of the top three businesses here, or the three big businesses here, there are learning from food delivery that they can apply to this business to uh, you know sort of do better on margins over time. Yeah. Just to give you a sense of how quick margin improvement has been in this business, we think Blinkit is amongst the fastest EBITDA break-even, e-business that we've seen. A lot of businesses that started much earlier, right? In different e-commerce avatars, whether vertical or horizontal, are yet to turn profitable or yet to break even at an EBITDA level. While Blinkit actually, on a EBITDA, at an EBITDA level, you had a modest loss of 3 crores or so last quarter, which is almost break even. And this is the journey of just the last 5 quarters to talk about, how quickly they've scaled up while actually improving profitability at all levels. Whether it is, their take rates in percentage terms, those have improved. Contribution margins, which turned positive in Q2, have continued to grow very healthily. And you have EBITDA losses from 133 crores that has come down to 3 crores in the last 1 year. And while the company is expanding aggressively this year, and this number may remain around the break-even level, as these stores mature, this number, we believe from FY26 onwards, will start turning positive. Yeah. Just some trends on, where has this growth really come from? Has it become a phenomenon outside, the top cities? Not at this point. If you look at just a couple of data points, bulk of the new store openings till last quarter, and I think this would be true for a few more quarters, are still happening in the top 8 cities. Though expansion into newer towns has also started picking pace. You would have seen, some of you, on Twitter or some of the other social media handles of these companies, you would have seen entry into cities like Varanasi, Vizag, Nagpur. All of these have happened in the last few months, right? So city count is also growing, but they're also expanding depth in the top cities. Yeah. The other part on the right hand side, what you see is the GMV or GOV per day. This number was on a base of 383 stores, 6 lakhs rupees per day. In the last 1 year, and this is all Blinkit data, in the last 1 year, they've opened more than 250 stores. And despite the lower initial throughput of some of these stores, the overall throughput for the overall platform has gone up from 6 lakhs to, and this is a rounded off number 10, this is roughly about 9.6 lakhs. And more interestingly, the top 50 stores of Blinkit are delivering a GMV per day of close to 18 lakhs. Right? This would translate into an annualized GOV or revenues of close to 65 crores. And you have to remember, these are 4 to 5,000 square feet stores, right? So this would really be close to 160, 170,000 rupees per square feet. It's just for context, a DMart is sub 40,000 at this point in time on a throughput per square feet perspective. Yeah. Just a sense of, what are various, analysts and brokerages estimating as in terms of what is the quick commerce TAM in India. Now, we have just put 4 different brokerage estimates here: Access, Bernstein, Equirus, and Goldman Sachs. The precise numbers are not important. You see that there is a broad range of $45 billion to $150 billion that you see here, right? This is an early stage business at this point in time. We are all still figuring out how big this business can be, what is the real underlying TAM, and this emerges every single quarter as these companies expand into new categories, find success. You have to relook at your TAM, etc. So what we believe is, it's you'll have to live with this broad range of estimates for some time, and being precise on this TAM is not important right now. What is important is having a view on whether this is going to be a large enough TAM for healthy growth rates to sustain for a long time or not, right? Now, what next for these guys? Of course, we've spoken about category extension. This is going to remain an ongoing journey. So, from quick e-grocery players to quick e-commerce players, that journey is still on. And, these guys are trying to crack newer categories. Even on the fashion side, they've started experimenting with enabling exchange and returns on their platform. If they can crack that, that will open up another category for them. This is what I'm really talking about: e-commerce going quick commerce, penetration beyond metro cities. The likes of Swiggy, Instamart, and Blinkit are somewhere in the mid 40s in terms of city count today. Zepto is much lower. The potential could be at least the top 80 to 100 cities in the near term, and maybe more in the longer run. Private label play from a margins perspective, and of course, very important part, that quick delivery should not come in the way of rider safety. And there is a lot of work happening on this aspect at all the companies. Yeah. Coming to how do you differentiate between companies, what could be the sources of competitive advantage here? We strongly believe that capital is not an edge. There are many well-capitalized players in this industry, and more importantly, this is because you have merchant partners who are investing in inventory. You can run this business with franchisees from a dark store operations perspective. you can actually run this business as an asset light business. So capital is not really an edge. There is some first mover advantage in the business, though. If you look at the growth of Blinkit in the last 3 years, despite being a slightly later entrant as opposed to an Instamart, Blinkit is now, if you look at last quarter's numbers on a GOV basis, Blinkit had close to 5,000 crores, while Instamart was just under 2,800 crores. Yeah, so the Instamart's first mover advantage by about a year or so has not translated into, uh, leadership on market share. Yeah. Some of the more important, sources of competitive advantage in our view are: one, operational excellence, what we have termed execution chops here, and tech stack. There is some semblance to QSR in our mind, at least, that this is a low barriers to entry or scale. You can enter this, this business, even scale up, given that the capital requirement is not very high, but it has very high barriers to thrive. Right? You've seen a number of casualties around the world in this business. It's not a very easy business to succeed in. It's an easy business to enter, easy business to scale, as long as you can put resources on the ground, but very, very difficult business to thrive in. Yeah. Scale is important, both from a better product margins, better terms of trade perspective, and also, the larger you are, you'll have a higher share of advertising dollars, and this again drives disproportionate profitability delta between players. Right. Lastly, this culture of experimentation that I spoke about, very, very critical here. I think Blinkit has done a better job than peers. Um, but all these companies are have the DNA to get this right. Yeah. But this is important from operations perspective. The one key to focus on. I mean, this really is an optimization of how much space you want, how many SKUs you can store there, and your in-store operations to ensure a certain delivery time to deliver a certain consumer experience that you're promising. Right. Another factor that differentiates these guys, right, is a cubic feet view of space that they take. Because customers are not entering your store, you can actually stack items, even on the topmost rack, right? As long as you can optimize the need to fetch an item from the topmost rack and still deliver the order within the promised time frame, right? But these guys are actually taking a cubic feet view of space and stocking, some of the low frequency but high value items in, higher up in the racks, right? So a lot of optimization in store, which is where, you go back to tech stack being extremely important, operational excellence being very important. This is a daily execution business, constant optimization business. And at least for the time we have tracked these companies, we've seen good progress on a lot of these aspects, right? And lastly, of course, people who can get hyper local part of assortment right, players who can get this right, and again continue to optimize on this one, will build stronger consumer affinity, higher retention rates, higher frequency, etc., and even higher AOV over time. Yeah. Just towards the last.
I know you're towards the tail end, but maybe
Yes.
we can spend a couple of minutes on the last slide, which is on the risks.
On the risks, I have 2 slides here, Prashant. I'll just finish it in a couple of minutes. So any business, of course, has risks, and we've not included execution risk from any individual player standpoint. That exists for all businesses, but this is more for the overall sector. Of course, competition. Any successful business will attract competition. You have a business here which has established high growth potential, and at least if you look at Blinkit's numbers, there is some visibility in terms of path to profitability. You would expect impacted incumbents, the modern trade players, etc., even the horizontal e-commerce players, you would expect them to enter. And you could see a phase of intense competitive activity. Our view on this one is, these businesses have been designed. So now there is a philosophical framework that I presented here, not going through it. This is a systems thinking framework where different systems are designed for a specific purpose. And if you try to find, sort of tweak that system to force fit an alternative or additional purpose, which, let's say, in case of horizontal e-commerce players, their entire system, which is very large warehouses, use of robotics in some of these warehouses, right? To a dark store model, it's not a very easy transition. And can you run 2 separate, completely different business models under the same business? Possible, but it's extremely difficult, is what we are arguing here. And similarly for modern trade players, as I said, this is, You can think of it as this business is a lot more tech than modern trade. So those tech chops again are not very easy to build. So our tentative position at this point in time is, catching up with some of these existing scaled up quick commerce players would be a tough ask, both for the impacted incumbents in other retail formats as well as newer players. Yeah. The other two risks that we see are one on regulations. There is some foreign ownership limit in inventory-led multi-brand retail. Uh, Also, potential regulatory intervention in terms of benefits and rights for the gig workers. Uh, the mitigant on the inventory side is quick commerce players are acting only as marketplaces. They are not holding inventory in their books. It is on merchant partners' books. This could still become an issue because these merchant partners do not sell on any other platform, and there could be some debate on that whether in spirit, right? Uh, this is truly a non multi-brand retail by by a company with high foreign ownership. But these guys have mitigated that risk to a large extent in our view. And lastly, some opposition, and which has already started happening from impacted retailers and distributors. We've seen some noise already. The mitigant or counterbalancing factor here is that quick commerce players, while they're impacting the business of general trade retailers and distributors to some extent, right? Because the underlying market is growing. It's not that these retailers or distributors are seeing a decline in their business. Their growth rates probably are suffering. The mitigant really is quick commerce players are generating a large number of jobs, and they're creating a lot of new business opportunities as merchant partners and dark store franchises. Now, these things are very difficult to sort of forecast on what direction some of these things can take, but we believe there are enough mitigants in place for these risks to be for one to overly worry about any of these. Right. Lastly, how do we look at these businesses? Our framework still remains the same. These businesses at scale, if executed well, can generate very healthy cash flows, can be run as fairly asset light businesses, so very healthy ROC characteristics at scale, and that is what we focus on. Long term, our lens really of investing in consumer tech companies have been to look for leaders that can dominate, positive unit economics, large TAM, large growing markets, and of course credibility and strength of the management teams. So that's really our way of the lens that we use to evaluate these businesses from a valuation perspective. Cash flow centric as in all other cases, right? I'll stop there.